What's going on, everyone? We are seeing some very big shifts in the market right now as Bitcoin is running with some serious momentum. It is almost to the $45,000 mark once again. On top of that, Apple is back to the $3 trillion club, which is crazy to even say. And while all of this is happening, we are seeing a ton of mixed momentum and mixed sentiment in the market right now. And at the same time, volatility is tanking quicker than we've seen all year long. So in this video, I'm going to explain what is happening in the market right now and where the moves are at. So we have a great video today. Tom should be back with us tomorrow. But looking at the market right now, it was pretty choppy all day long. And it's basically been like this for, like almost 2 weeks now. It's crazy. The market itself has not really been moving that much because essentially what we're seeing is big tech stocks like kind of holding everything up, while at the same time other areas of the market have just been all over the place, right? So basically it is made for an extremely choppy market where it's like the market doesn't know what to do, right? And basically because of that, there's a bunch of chop. Now, while there's a bunch of chop in the overall market, and while that sucks and while that's boring, there are other areas of the market that are running with some serious momentum, just like I talked about with Bitcoin and the other cryptos right now. So they're getting a bunch of hype into them right now. Basically, like I said, Bitcoin itself is at 44,000 again. And basically there's a bunch of hype with this potential Bitcoin ETF going through. On top of that, Bitcoin has also loved the high chance of some earlier than expected Fed rate cuts. On top of that, there's a ton of money just sitting on the sidelines right now in like money market funds and stuff like that. And then while all this is happening, as you could see just by looking at the environment around you, the cryptocurrency space is, starting to get just a tiny bit of the hype that it used to have. And basically all of this has, made for some relatively bullish action and flows with Bitcoin and other cryptos right now. The reason this is important is because we have stocks like COIN, which is Coinbase, you have MARA, you have Riot, and you have a bunch of other crypto-related stocks that are seeing some pretty great inflows right now. For example, Coinbase basically went from $70 a share all the way up to like $147 a share just over like the past little bit over a month, right? So it's moving with some serious momentum right now, and it's worth watching because as we all know, whether it is, you could say basically what we see in the market are shifts in momentum and rotations in and out of certain areas of the market. For example, earlier in the year, we saw all of the hype with AI stocks like Palantir and ticker symbol AI, and those stocks were running more than any other stock in the market at the time. And you could say the same thing about when there was an EV craze and a SPAC bubble and all that. And basically what it looks like right now is it's crypto's turn, at least in the short term. So keep a close eye on it going forward. Coinbase is one of the stocks that has seen most of the gains so far. But what's also pretty interesting is, like I said with Apple in the intro, Apple had a fantastic day today, and it's back in the $3 trillion club, which is great to see. But at the same time, it is still not at its all-time highs just yet, like one of its competitors, Microsoft, has already cracked. So what's worth noting is that while Apple is holding up very, very well, and while it's still super close to its all-time high, it's not necessarily it's not in a super euphoric mode just yet, but it's definitely getting there. And when you have Apple moving the way it is, like a 2% update today, it puts a ton of buying pressure, direct buying pressure onto the market overall. So basically when you have Apple up 2%, no matter how many other stocks across the rest of the market fall, it just creates some chop. So going forward, keep an extra close eye on Apple because it will have a direct influence on what the rest of the market does. So for example, let's say we open up tomorrow and Apple is selling off in a big way. That can tell you hey, especially if other stocks in the market are also selling off, it'll make it somewhat easy for SPY to drop lower. However, at the same time, if Apple keeps running to the upside like it has been, and the rest of the market also starts to run to the upside, then that can kind of turn on the jets for SPY. But at the same time, if we see Apple run to the upside and we see the rest of the market red, just like we saw today, you better expect chop because that's just how it works. So keep that in mind as well. It's definitely worth noting. And, as we talk about potential chop situations, over the past 2 weeks or so, it has been a giant chop fest. And it kind of sucks and, kind of makes it eliminates a lot of the opportunities for short-term trading. But one thing worth noting is that, volatility on an absolute basis has been plummeting. So basically what we can see on the chart right now is the realized volatility for the past 10 days for SPX, and that's what the chart is plotting. We could see that, in the beginning of November, not only was realized volatility at a decent level, but it was also increasing day by day by day, where what we're seeing right now is not only just the record low realized volatility for the year, but it is falling at such a rapid pace. And while this sucks, and while no one wants to see this, and while it's super hard to trade in these environments, the good news is that a lot of times volatility is mean reverting. So basically volatility is something that kind of jumps up and down all the time. And we could see in the past, when we saw a giant drop in realized volatility, like in April, and you could say April of this year, eventually it came back up, and it came back up in a giant way. So basically what this means is while the market has done nothing over the past 2 weeks, once we get past this point, the market should really, really move, and there should be a lot of opportunity associated with that. And this is just how the market and volatility and kind of how human nature and just market mechanics work. So long story short, while the market hasn't really been moving too much, it's going to move soon. And when it does, it's going to be a big move full of a lot of great opportunities. And when that happens, it will last for at least a couple weeks. So at least you have something to look forward to. But more for tomorrow, you can say. We do have a couple more exciting earnings for the week. C3AI, GameStop, and Chewy all report earnings tomorrow after the bell, so keep a close eye on them. As we all know, GameStop has seen a little bit of hype lately, but honestly, it's kind of been all over the place. Chewy is a stock I own for the long term. I think it's at a great level, and whether the stock does great or whether the stock falls on earnings, I'm still going to hold it. It's just a super long-term hold for me, but of course it would be nice to see it pop up in the short term. And then ticker symbol AI is a lot more momentum driven. So for example, if they have a really good outlook with some of their AI products or anything like that, this one can really catch some steam and start moving to the upside in a big way. While at the same time, if the hype doesn't live up to, you could say, investors' expectations, this thing can definitely, eat some dust, you can say. So keep a close eye on these ones going into tomorrow. It should be an exciting couple days because we also have some earnings on Thursday as well with Broadcom, Lululemon, and DocuSign. And then shifting over into the calendar for tomorrow, it's basically empty, so that's a good thing. We don't really have to worry about anything. So it is clear skies for some setups for tomorrow. So a stock I'm watching very closely right now is Zoom, and it's to the upside. I talked about this one quite a bit over the past couple of weeks, and it has been running in a pretty good way. Yesterday, it did pull back a decent amount, which, while it is what it is, it's also just expected given the volatility of this stock. Overall, the way I look at Zoom right now is that, of course, it is super oversold in the grand scheme of things. Of course, it had all the hype in the world in the 2020 pandemic days, and this stock was trading for just under $600 at one point, and basically it fell off a cliff, and now it's trading for $68 to $69. What I really like about it is that it has been basing off of this support level for a while now. What you'll notice is that basically ever since 2020, this stock has been in a downtrend no matter which way you look at it, right? Where at this point, the stock hasn't really been falling that much over the past couple months and even the past year or so. Sure, it's down a little bit since you could say the end of 2022, but generally speaking for 2023, it has just been flat. And basically in these types of situations, it's showing that the supply and demand balance is shifting, right? We are seeing some of the people who shorted the stock start to cover, and we're starting to see some people revisit this stock and say, you know what, maybe this stock is oversold. So basically, I'm looking at it in a bullish way. This doesn't mean it has to rise for tomorrow, but I think over the next couple days and the next couple weeks, I think it presents a great risk-reward setup. Let's say in the event Zoom stock gets rejected and it ends up falling, maybe you cut losses down at, below the $60 support, but in the event the stock ends up breaking out, you could look for a profit target close to that $100 level or even higher. So overall, I love the risk reward on it. I'm bullish on Zoom, and it's a stock that I will definitely continue to watch closely going forward. Another thing about it is that Zoom, when it does run, it tends to run for a couple days to a couple weeks at a time, which is great to see as well. But that's that. Another stock I'm watching pretty closely for tomorrow is MU, and we talked about this stock a little bit yesterday, and basically MU has been relatively weak, and it did fall today. It's down around 0.8%, which is good to see, but realistically, ever since the market opened, it was just super flat. So it's like, yes, technically it was down, but at the same time, it's not down that much. That's the best way to say it. But either way, what we've seen over the past couple of years is a ton of inflows in power and money just get pushed into semiconductor stocks and chip stocks. So like stocks like, of course MU, but also AMD and Nvidia and other ones have just been like the kings of the market. Over the past couple of months, and especially over the past couple of weeks, we have seen a significant slowdown in that type of sentiment. Nvidia, for example. Of course, when you look at Nvidia from where it is right now to the start of the year, you can see it is still up a ginormous amount. However, over the past couple of months or so, it has done absolutely nothing. It has been stuck in this range. Again, the supply and demand balance is shifting here. Nvidia had a very strong resistance at $500 a share. It rejected off that. Over the past couple of weeks, it has just been like drifting lower. It has not been in free fall by any means, but like I said, the supply and demand balance is shifting here, and I am expecting a calm down or a calming effect with these chip stocks going forward. MU, out of most of them, I think provides the best setup. Looking at MU, it has been relatively weak compared to a lot of them. And another thing worth noting is that even on a day where, let's say, the market itself was, up, you could say just super flat, but we saw other stocks like Nvidia up 2.3%, MU was actually still red. And another thing with MU, like we talked about yesterday, is a lot of times it'll have these setups where it pops up for a couple weeks and then it pulls back a decent amount. And this example can be seen many, many times in the stock. Pops up a decent amount and then it pulls back for a couple weeks at a time. And you could say the same thing in like a million different examples on this chart, right? Like the pattern just keeps on repeating and repeating and repeating, right? Like I just circled a couple of them, but this pattern happens all of the time with MU. So that's what I'm looking for with it. I will be watching it to the downside. Again, that doesn't mean it has to fall off the face of the earth tomorrow, but I think the risk to reward to the downside is pretty good. And I'm watching it pretty closely in a bearish way. But those are some of my favorite setups for tomorrow. So let's get right into the momentum plays for today. Again, I wish we had Tom with us, but he should be back with us tomorrow. But with the first one, we have NIO to the upside. So this one started to see a little bit of daylight this morning, and then it just got rejected. It's up around 1.5% on the day, and it was originally moving with some decent momentum. But again, it just wasn't enough. So basically, MU is up slightly. If we could see a break above like $7.75 tomorrow, I think this one has a pretty solid setup for an upside short-term play. With the next one, we have Netflix, and this one is to the downside. So Netflix is up a tiny bit today, but again, it is kind of in that group of stocks that is just like starting to slow down a little bit. It has been on fire over the past year as it basically went from, you could say like 200 and, I don't know, $85 a share all the way up to highs of 480 or so. And it's starting to see a little bit of selling pressure creep in. If we see a break below $450 a share, I will watch this one to the downside. And then with the last one, we have Tesla for both directions. So Tesla was originally moving with some great momentum this morning, and it kind of fizzled out. But basically, if we see a break above today's like high, right around like $246.75, this one should present some good bullish opportunities going into tomorrow. And at the same time, if we see a complete reversal and eventually a break below $236 a share, then I will also be watching this one to the downside. So this one can go either way. Basically, if it breaks the upside level, we're looking at it for a momentum play up. And if it breaks the downside level, we are watching it for a momentum play to the downside. And that's Tesla. And don't forget about the Netflix downside play as well. And then the NEO upside play as well. But as usual, after the momentum plays, we have a big money trade. And today's one is pretty interesting. We are looking at ticker symbol IRWD. And this is probably a stock that you hear and you're like, what is this stock? What is this company? I never heard of them. And exactly. So basically, they are a biotechnology stock. These types of stocks are super volatile and they move a ton based off like FDA drug approvals, you know, any good outlooks or just any news or events at all. And basically what we saw today was $1.6 million go into the IRWD 10 strike call options that expire on May 17th of 2024. Now, these call options are slightly in the money. They have, you know, a decent amount of time to them, so they're like, you know, pretty decent options. And $1.6 million is definitely not a small amount, right? Now, the thing is, with stocks like this, they move so much based off of news and events and, you know, catalysts. So, you know, only trade this stock if you can handle the heat. In the event they have a not so favorable news article come out. But either way, you know, when you see a big money trader put $1.6 million into a trade like this, it is not by random chance. I like the setup. Again, it is risky, so you just have to keep that in mind. But biotechnology stocks, just like this one, move a ton in both directions. So keep a close eye on it going forward. The stock itself has been moving to the upside in a pretty strong way over the past couple months, and it has a decent amount of momentum with it. On top of that, what we'll also notice is that it has a very weak correlation to SPY, which is a good thing because when you look at SPY right now, SPY doesn't even know what it wants to do. It's all over the place. So when you have a stock that, you know, not only doesn't move with SPY, but it also has like a relatively weak correlation, that's a good thing because you don't really have to worry about the overall market's movement. So good stuff there. Keep a close eye on this one going forward. If you guys are new to the channel, make sure to demolish that subscribe button. When you do, you'll see our videos recommended to you more often. In every single video, we cover charts that you won't find anywhere else, basically. We cover all the important events, earnings, and everything you could possibly need to know about the market. On top of that, we have setups in every single video as well. So when you subscribe, you'll hear from us more often. But with everything being said, you know, the market has been pretty choppy still. And while it sucks and while volatility is literally at its lowest level all year, the good news is that volatility is, for the most part, mean reverting. And basically what it means is volatility is going to come back and it's going to come back strong. So stay patient. In the meantime, stay disciplined, keep your head up high, and, you know, understand that as a short-term trader, if you can survive environments where the market literally does nothing for weeks at a time, when the market actually does move, you'll understand how much more easy it is to find good opportunities. So keep your heads up high, and in the meantime, keep in mind that while the market itself isn't moving, there are other areas of the market that are seeing a lot of inflows and momentum and, good price action. So keep that in mind as well. Besides that, thank you guys so much for watching, and let's have a great day in the market tomorrow.